we need is communication. That's good communication.
Yeah.
That's most important when there's bad things.
Yeah.
So if things negatively happen in the process, which if you do it enough, it'll happen, communicate it. And take the emotion out of it.
Bienvenidos a otro episodio de Atlanta Dulce Hogar, este podcast dedicado a bienes raíces, comprar, vender e invertir. And this time, I got the pleasure to have with me Keith Converse. He sells sneakers. No, just kidding.
I get that a lot.
I got the pleasure to have with me Keith Converse from the Perpetual. He is a loan officer, and thank you so much for being here, man.
Thanks for having me.
Yeah,
Happy
it's
to
a
be
pleasure.
here.
It's a pleasure. So to break the ice, to make this conversation flow,
For
I
sure.
want to ask you 3 things that your house must have.
Okay.
Besides electric, plumbing,
Yeah.
you know, the essentials.
I like it.
So like, I don't know, do you need to have a man cave, for example?
No, I need a wood-burning fireplace.
Okay.
Huge for us.
Wood-burning fireplace,
Wood-burning
like
fireplace.
a pit. Or,
No,
or
just
more
normal
like
fireplace, but just
Okay.
it needs to be able to have wood instead of gas.
Okay, all right.
And then a garage. I gotta have a place to put my car.
Oh,
'Cause
right.
up
Because you have a
until-
background in racing?
Yep,
or?
yep. Background in racing, and none of my cars are as exotic as that. But I like to have them in the garage.
Yeah.
I recently displaced my wife's car for the lawnmower, but it's okay. But we gotta have a garage.
Yes, okay.
And then third, I mean, this is cheating a bit, but
Okay.
because it's not in the house, but I need to have a decent sized yard.
Oh, no, but it's part of the house.
It's huge.
It's part of the house. So
We
you
want-
need to have a jar. Any pets? Or?
Yeah, we have a dog, so he
Okay.
he has a place to run. We have a greenhouse, so we have a place to grow stuff.
Oh, that's nice.
Oh yeah, it's my wife wants chickens.
Oh, really?
So oh yeah.
When
yeah.
I was little, my grandma had chickens.
Yeah?
That wasn't like rare.
Yeah.
But it was there, like in the
Yeah.
house, like, you know, like, okay, it's not normal that people have chickens. I'm from the city. My grandma used to live in like really in a little town, close, very like walking distance close to the beach.
Oh,
and we had she had chickens and hens. And
Yeah.
you put the eggs, and
Yeah.
it was really
The eggs.
different to have the eggs.
The eggs are
right
so much
there.
better.
Okay, go get eggs in the. I'm like, what?
Yeah,
We don't
right
go
there.
to the store.
Let's go right there.
Yeah, it goes right there. Sometimes for a little kid, it was like, yak.
Yeah.
But still, it's like I remember now, and I'm like, whoa! I used to eat really organic.
Oh, very. And the taste and the color is
Yeah, it's
crazy
different. You don't have the white or the yellow, or I don't know what if that color is yellow.
yeah.
It's a weird color.
Yeah.
It would be with spots.
Oh, yeah, those. Yeah.
The hen or
Yeah.
the egg would
Yeah.
be with spots instead of just
Ooh.
the one color. I don't know if that
I
was.
don't know what kind that is, but I've seen them.
Okay. So, I guess because of the race or not the breed of the.
I think so. I mean, for fear
I
of
don't
turning
know.
it into a chicken podcast,
Exactly.
I think it does have something to do with
Okay.
chicken. But
I
let me
didn't
tap my
even know.
knowledge.
Like when you said that, I'm like, oh, so there is breed chickens.
Oh yeah, I've
Okay.
learned a lot about farm fresh eggs. Lately,
Okay,
and
this was all for the chicken podcast.
yes, that's all. Thanks for having me.
Exactly. Well, that's nice to have. How do you call it here? The organic egg, or
Yeah,
what do you?
organic, farm fresh.
Farm fresh.
A lot of things called organic now that maybe aren't.
I guess Creole would be the name for us.
Yeah?
Instead of farm or just
Ah.
like, it's in your. It has nothing to do with French or anything, but
You know where it came from.
Exactly. It's
Yeah.
like okay, this is raised here in your house. Criollo in Spanish.
Interesting.
Criollo.
Okay.
Okay. Let's talk about what
Yeah.
you know.
For
Not,
sure.
not, it's not chicken.
Okay, good. Because we tapped that knowledge.
Exactly. So
Yeah.
you're a loan officer.
Yes.
And one of the things that you specialize on is self-employed borrowers.
Absolutely.
Who are those?
So self-employed borrower, it's obviously, we first think of someone who owns their own business.
Okay.
Yeah, sure, that could be someone that owns a large business, but that also could be someone who's just self-employed. They own a, let's think of like I'm thinking of a trade. So a plumber who works for himself.
Okay.
It could be somebody who's a one-man band.
A realtor.
A realtor, exactly.
Exactly.
Or people that do Uber Eats. They're 1099. So a 1099 contractor.
So delivery, they call them drivers.
Yep, it could be.
Like if you do several of those, if you do Lyft, Uber Eats, DoorDash, like and they're not paying for this publicity.
Not at all. Not at all.
And like all these Amazon Flex.
Yep.
There is a lot of those.
A lot.
I think there's another one called Spark that is for Walmart, and then there's a lot of them.
There's even more every day.
Really?
Yeah.
And so that person will be determined a driver.
Yeah.
Right?
Yep.
So he's self-employed. He receives 1099.
Correct.
At the end of the
And it could be someone
year.
like that. It could also be somebody that I've had this recently. They work in a kind of specialty job for a specialty company. They only have, that's all they work for, but they work for them on a 1099 basis. So it could be a driver, or I've had a physical therapist who she's 1099. So if you get a 1099, you technically are considered self-employed.
Okay.
So we have some different products for that because, as you may or may not know, your accountant might be doing a fantastic job in limiting your tax liability at the end of the year. But as some people have found out, they've limited their tax liability. We got to look at their tax returns to qualify for income, and it looks like, well, it doesn't look like what they actually make.
Like your make, exactly. Okay.
So that can be kind of I won't say a hurdle, but it could cause problems with a traditional lender like a bank. Not all banks. Don't want to knock on any banks or credit unions, but some are a little bit more strict on things like that. So we can evaluate tax returns, help your customer see if what house we can qualify, or we have other avenues. We can use your bank statements from your business. We can use your 1099s.
Can a bank statement be a QM mortgage? Like
no.
Qualify. Okay.
No. So once we start qualifying your income utilizing an alternative document, so something other than tax returns,
taxes, then
it
it's
becomes
non-QM.
Correct.
Okay.
And we love non-QM.
Okay.
We've been doing it for years. A lot of lenders have been jumping into it recently.
Okay.
We've been doing them for, since I can remember. So at least 5 years. I know that some of my colleagues have been doing them longer, but I actually worked in a CPA office for like 3 or 4 years while I was in college.
Okay.
And so reading a tax return is easy
for
us.
You because you have
we know what we're looking for. We know how to read them. We know what income to add back. We know what we can't. We know the story. For example, I have a customer closing Wednesday, and his accountant did a depreciation of a vehicle 1 year. Following year did a Section 179 deduction.
Which is like, I think it's big trucks or something.
Big trucks. Like it's also what it is. It's a taking the total depreciation all at once instead of spread over a multi-year period.
Okay.
So one I can add back into income, one I cannot.
Yeah, like miles you can add back to income, but depreciation you can't.
I can add depreciation.
Okay.
But I can't add Section 179.
Oh, okay. So there's many rules.
There's a lot of rules. And we know what we're looking for, and we know how to talk to the underwriters. So my underwriter's actually telling me, hey, have our accountant just confirm we're doing this for tax purposes.
Yeah.
And I can use the depreciation. Okay, great. So that way we're able to stay within a QM.
Okay.
Stay with a conventional mortgage with a self-employed borrower.
Oh.
If none of that works, we have bank statements.
Because again, the QM is just because you sell to anybody.
Correct.
If it's non-QM, the one that is originating the loan keeps the loan.
Typically,
it's gonna be the servicer too.
You're correct.
Okay.
That's evolving.
Okay, it's evolving to something else.
To some as well, and we have a few investors that actually buy up
Okay.
non-QM mortgages from other investors.
Oh, okay.
And so,
that's changing now because people is like, I like the non-QM too because that's money.
There's some good borrowers,
and it's a little higher.
It is. So what you can expect with a non-QM mortgage is you're probably going to be 1.5%, maybe 2% higher than a standard mortgage on rate.
Okay.
But what you're doing is we're adding risk. So everything to do in business is risk, like we know that.
Yeah.
If you're self-employed, you definitely know that.
This is one of the things that is most important at the time of what's gonna, like somebody asks you, what's gonna be my interest? Well, how risky are you?
100%.
Right? That now people don't say that because sometimes it's disrespectful or people feels hurt. And it's like, well, how risky are you?
Yep.
You're very risky because you have 10 late payments.
Yeah, that's true.
And you're very risky. I'll give you a loan for higher
100%. So
risk.
How we label risk is mortgage rate, interest rate. Because an interest rate is just a function of risk. So as we add layers of risk, now, how do we determine what's a risk? I tell my customers, if you were to have a friend, but you don't know, and he said, hey, I need to borrow $100,000 to buy a house.
There you go.
You go, okay, how are you going to pay me back? Well, that's all that's the only question we're answering throughout the entire process. How are we going to pay it back? We know you will, but I don't know you. You don't know me. The bank doesn't know us.
They don't want the house.
They don't want the house.
Because you picked the house.
100%. Lenders are not landlords.
Yeah, so they don't want they want to make money borrowing money. 100%. They don't want to make money with houses.
So that's how we answer it. Well, we answer that question with showing your income. Well, do we do it with tax returns? No, we're doing it with bank statements or cash flow. Okay, well, that's a little riskier because that can change.
Yeah.
So interest rate, there's a little there. That's a little risk. Is it a primary house or is it an investment? If it's an investment property and things go poor, you're more likely to foreclose on that house than the one you sleep in.
Yeah.
So that's an added layer of risk. So that's
I see what you mean.
The whole process boils down to how are we going to pay back this mortgage? And each step has been set up and each guideline is based on probably past non-performance or past issues to just answer that question kind of on a uniform basis because unfortunately, sometimes we've taken the human element out.
That's right.
And so we have to fit inside certain guidelines and none of us live inside a mortgage box. Yeah. I don't even live inside one.
Yeah.
So that's what my job is come alongside you and go, do we fit in a normal mortgage box? Do we need to think outside that box to more of a non-QM where it's a little bit more?
Yeah. QM means qualified mortgage.
Yes.
Just because I really hate acronyms.
I do too. I live with them.
I told you about the one that I got to the real estate class and people say MLS and I'm like, I don't know what they're talking about, but if we're going to the Major League Soccer, this is great.
I'm in.
This is amazing. I didn't sign up for this, but I love soccer.
By the National Major League, National MLS, which has nothing to do with your MLS.
Yeah, exactly.
So it's, there's so many.
No, and the rule is, and I feel like and this is another podcast about literature or grammar.
I'm in.
That really, the problem is that, and the rule is, you gotta tell me first.
Yes.
And then you can say how many times you want. I don't care, but you gotta let me know first. And the rule has been broken by people that they just think
It's just jargon.
They just throw it.
Yeah.
It's just it's so many.
Yes.
LMAA, OOO, LOL, like, and then you learn I learn LOL, and then LMAA, comes along, and then
why are you calling my text out like that?
Oh my god! And then it's like so many, really. But yeah, non-QM, QM.
Yep. And when we say a non-qualified mortgage, all that's also saying is it's not qualified to go conventional with Freddie or Fannie Mae.
That's what I wanted to get to.
Yeah, that's what you're not qualified to buy a house. It's just a non-qualified mortgage to be purchased by a conventional lender.
A conventional lender.
A conventional investor, I'm sorry.
So who is Freddie Mac And why is he buying mortgages?
Well, usually he buys it because Fannie Mae doesn't. No, I'm just kidding. So,
who is Fannie Mae?
Freddie,
Is she a Oscar winner?
no, definitely not. So this is when you have to start editing pie charts and flow charts. So
Yeah.
the basics are there's what's called an FHFA. Mm-hmm. I believe it's Federal Housing Finance.
Mm-hmm. Yes.
I can never remember the
There
full
you go, an
acronym.
acronym.
I just know they govern everything we do in terms
Yes.
of guidelines. So
Guidelines.
FHFAs are include Fannie Mae, Freddie Mac,
Okay.
and
Those are markets, right?
yes and
Am
no.
I wrong? Okay.
So Freddie Mac and Fannie Mae are. I can't remember. They're pseudo-government in that they have government funding
Yeah.
and some oversight, but they're not run by the government.
Yeah, they're
And
like
not
half and a
funded.
half.
Yeah, it's all the bad halves. So I say that tongue in cheek. So they set guidelines for conventional mortgages
Okay.
because they insure those mortgages. And they say, if you have that, we'll buy that mortgage.
Exactly. And
So-
we'll give you more money.
We'll give you money
so
for
you
it.
can lend more money.
Correct. Because let's back up even more. How modern mortgage market is set up is you have a mortgage loan originator like myself working for a lender. Now, there's different elements to that, but we'll just call it a lender for this point. That lender works with the buyer, or a borrower, I should say, go through
Okay.
the whole process, qualify for a mortgage, you
Yes.
close.
Okay.
Once you close, that mortgage is then all bundled up together and it's sold to a servicer, like
To
you've
a
mentioned
servicer,
before.
to somebody.
And that servicer is a company that collects your payment for the next 30 years.
Exactly.
So that's what a servicer does. Fannie Mae and Freddie Mac, they buy loans as well. Not the servicing portion, but they'll buy the loan so that they can take some of that risk off of the lender because the lender is there just to lend money.
Exactly.
Well, they have to refill the pot, like you said.
Exactly.
So they sell these mortgages. So Fannie and Freddie say, I will buy mortgages that fit in this box.
Exactly.
That's guidelines.
And that's why
Yeah.
sometimes they ask so much and they
Correct.
question so much. Have they been around for long?
They've been around a long time. I can't remember how long when they
Yeah.
started, but I also know
Before or after the crash?
Well before.
Well before. Okay.
And they also
And the guidelines weren't as good because the
No.
crash was part
but
of the
those-
guidelines.
Well, no, I believe those loans too may or may not have. I don't know specifically, but I don't know
Okay.
they were necessarily Fannie and Freddie loans either.
Okay.
Some of the crazy ones. But where mortgage insurance comes in, because this is kind of part of that conversation, is mortgage insurance insures the lender against foreclosure.
Exactly.
It doesn't protect the buyer.
So, like for example, if I lose my house, Freddie or Fannie pay the servicer.
Actually, mortgage insurance will pay the
Okay,
servicer.
mortgage insurer will
Yep.
pay the servicer, and then whatever, they get the money from them.
Correct.
And then they sell the house and they get their money
Correct.
back.
Yeah, and mortgage insurance doesn't pay for the full value.
Yeah.
It's a portion. But
Yeah.
what that does is it allows buyers to buy a home with less than 20% down. Because before mortgage insurance, you had requirements of 20 to 25% down
Yes.
minimum. Now we're all the way to standard is 5% down minimum, and you have some that are 3%.
You know what really gets me concerned? Wow.
Yeah.
Why is this how long has that changed? Because there are people still,
Yes.
Americans, still today, 2024, that tell me, no, you need 20, you need too much, you need 20% down
Yeah.
to buy a house. And I'm like,
No, you don't.
I would have thought that of somebody that is not from here that maybe don't understand. But I was like, why is there not enough information about,
Yeah.
no, there is 3% and there is 3.5. I mean, conventional is even lower than
Yeah,
the
exactly.
one that is
Than
support,
FHA, yeah.
support by the government.
100%.
Which is,
And I had a customer that wanted to avoid mortgage insurance and put 20% down, but I showed him that he could put 15% down and his mortgage insurance payment was going to be $75 a month. And he's like, wait, on a $500,000 house, 5% is a good chunk of money. I could keep that in my pocket and pay $75 a month for until I have enough equity for the house for that to fall off. And I was like, yeah.
If it's conventional.
If
If
it's
it's
conventional.
FHA, it doesn't fall.
So on FHA, FHA is Federal Housing Administration, and they actually insure the loans as well as buy the mortgages themselves. So they act like Fannie and Freddie. It's called Ginnie Mae. And they do it a little bit different because
she has powers. She goes.
She has a lot of powers.
Right? Oh no, it's with the tail.
Yeah, exactly right. So with FHA,
I didn't notice until you said exactly right.
So what Ginnie Mae and FHA do is they actually do take over the mortgage insurance part and the purchase. Well, actually, they don't purchase loans; they just insure them. So they set the guidelines, but it's for a riskier borrower. It's a lower credit score. It's a low down payment, like you said, 3.5%. They also look over VA, which is a whole other product we can do a podcast on.
Yeah, it's a VA Veterans Affairs.
Yeah,
right?
Veteran Affairs, and that's for veterans, active duty service members, or surviving spouses of an eligible veteran.
Okay.
And we ought to do a podcast on that one day.
Yeah,
VA loans are
it's way
amazing.
different. Yeah,
it's very different in a great way.
Sometimes in VA they get money back. I've seen
it too.
I've seen closings where they get money for buying a house, and I'm like, why aren't veterans buying a house if they get money to buy a house?
Well, with a VA loan, you can put as little as $0 down.
Yeah,
which is amazing.
But then you got the closing costs, and sometimes they cover it.
Yes, and with a VA mortgage, the seller can pay nearly all your closing costs, plus up to a certain percentage of other closing costs, which always is more than the actual closing costs. So what we can do is the seller can actually cover nearly all and probably all the way up to all of the closing costs. And then if they put money out for the inspection and the appraisal, they can actually get that money back in closing. I did that for actually a good friend of mine. He's a Marine, retired, bought his first house. And they walked in, I think they brought maybe $100 to closing because the sellers gave so much to cover their closing costs. And that was in 2023 when it was a seller's market. But
it's amazing.
There are people out there that also want to sell to veterans. So
when it was that's not fair housing.
No. But actually, it's not covered.
Some people, Oh, really?
Veterans are not a protected class.
Oh.
So there are sellers that can say they don't want to sell to veterans as well, and that's
really
okay. Yeah.
Okay, I thought that because I was thinking I want to only sell to veterans, and it's like that's not fair housing.
That's probably not.
That's not fair. Like you cannot. I mean, you can want that as a seller, but you just cannot say it on the advertising. Correct. Or not with me. You can do it as a sell by owner.
Yep, and
you can do whatever you want as a sell by owner.
That's a fact. But so back to the non-qualified mortgages.
Yes, which are your specialty, right?
That's our specialty. And we're direct sellers with Freddie and Fannie as well. So we do a lot of conventional, do a lot of the FHA, VA as well.
And then you do the I-team you guys call.
We do.
But which is, we call in so I'm a more Spanish or Latino, whatever, however you want to call it, Latinx, Latino, whatever. I don't care. I'm like, I speak Spanish. And they go like you have to they call it tax ID.
Correct.
This is what I was going to. Yep. But you guys more American style, you call it I-team.
We call it
which is the
individual tax ID number, tax identification number.
Oh.
So it's actually the government form name is ITIN.
ITIN.
And so since mortgages love acronyms, we call them ITIN.
I would say Americans love acronyms.
That's probably accurate as well. I'm both. So
we were just talking about this. And so this person.
Yep.
So check this out. I've been doing this since 2018, and this person, I got. Most of the time, I don't have the residency, or I don't have
the green card.
Yeah, like the green card or some visa. I'm here. I'm working. I'm legal.
Yep.
Sometimes they just don't have most of the papers.
Yep.
And what they do is like they are hard workers. These people have saved money, pay taxes. They pay taxes.
Yep.
Now, most Americans, not the lender side, the realtor side or the real estate side, they don't know. And one time, it was like around 13% the interest.
Yeah.
And the listing agent calls me and says, "What are you doing to this person?" I'm like, "I'm getting them into a house."
Yeah.
Because they've been renting forever.
Literally.
And she's like, "But why are you giving these people?" Well, first, I'm not a loan officer.
Yeah.
And second of all, you have no idea what you're talking about.
Yeah.
It's amazing how people don't
Yeah.
know about this.
Well, and back to that risk conversation.
Mm-hmm.
If someone is here and doesn't have the social security number, which means we don't necessarily have I know with an tax ID, you file taxes, but it's a different reporting on our side. You don't have a traditional 1040 tax return.
Yeah, it's
there's
like
not a social security number.
It's not a 1040. It's more like they're taxing the enterprise, the company,
Yeah.
more than you. But
That's
you
correct.
are the representative.
Yes, you are.
So,
But when it comes to requesting tax returns, that's usually not going to work with a tax ID customer.
Okay.
And so we ignore that, and we basically calculate income like we would on a 9QM. We can use pay stubs, not W-2s, because a W-2 will have a social that
yes,
may not match the tax ID.
yes,
So we can use pay stubs, but not W-2s. Or we can use a 1099. We can use bank statements, personal and business. So if you have someone who's, let's just say a recent example, the customer, he is a landscaper. So
I was gonna tell you that one because I know a lot of landscapers.
yeah, for
there.
sure. And he has his own business, so he's running everything through the business. Well, we can use business bank statements to qualify his income.
Okay.
And there's a formula and there's a way we have to do it specifically. And then we use their ITIN form to qualify them as a person, as the ID, along with their driver's license. So we use that instead of a social security card. And then we treat it like a normal mortgage. Now, because there's different risk factors.
But because it's not a person, it's a company, then it's higher the interest.
It is.
Okay.
It is higher. And it's also higher because there's we're calculating income in an alternative way. And because of, there's not a visa, so we don't know how long they're going to be here.
Yeah, or if they're leaving soon, or if they're
We
going to
don't
kick them out.
Yeah,
or
there's lots of especially with
lots of risk.
A lot of risk.
That's what it's saying.
Especially the court
but
system taking so long.
let me clarify this. You can be an owner of any house, any property, any land. Well, there is a new law with the communist countries. And among them Venezuela, but they don't name Venezuela. They name Maduro, like they name their government and their people.
Yes.
But with Russia, China, and North Korea, they name the country.
Yeah.
So one of the things is that you can go and get a house, with some exceptions. But if you're not from those countries.
Yeah.
Let's say you buy your house. Nobody is gonna take it away from you unless you don't pay.
Correct.
So, for example, if you gotta go out of the country, you can rent it and just pay it, and you're gonna be able to have the house on your name, even if you don't live here.
True.
Also, you can do, I guess, if you can do tax ID, you can do foreign nationals.
You took the words out of my mouth. So we can do foreign national as well.
Yeah.
One we recently did was a customer. He lives in Mexico.
Okay.
And he actually had a vacation condo in Florida.
Okay.
And so he's like, he'd paid cash for it and decided he wanted to take that cash out, leverage for something else. Well, he still lives in Mexico, his business in Mexico. He just has a house here. So because
you just gotta translate and that's it. Or if you're from England, you don't have to translate.
Or I use Google Translate Docs.
Okay.
Fantastic.
Oh, really?
It's a very good service.
Oh.
It'll actually take a document, translate it to English. If for some reason we need to do it on an official basis,
okay, then somebody
embassies will do it as well.
Yeah.
It's not too expensive. But that's a process we can do.
Depending on how many pages. I think it's like 10 or 15, maybe $20 per page.
It's not bad. So and we would help you know which ones we got to do. not everything.
Oh, okay, that's good.
If I can use the Google Translate initially, I can say, oh, I don't need that doc. I don't need this doc. I need this one. Then I can give you a list of what needs.
Probably
to be
official documents you need translated.
Probably,
right?
Yeah.
Like not bank statements, but like
Exactly.
What do you get for identification? Is it a passport?
So we get a passport and a driver's license.
So that you have to
I don't.
translate. No, you don't,
because it's.
Oh,
you can
most
tell.
are bilingual.
Yeah,
sometimes they're bilingual.
And with driver's license and passports, it's also pretty clear what's what. So what your first name is, what your maiden name is, what your surname is, what your familial or your family name is. That's all relatively simple. It's more of contracts, like if you were to do profit and loss or certain things like that.
Or if you say, hey, I have something rented here in Mexico.
Yes.
Then well, you need to translate that. And
or I had one. A gentleman was. This will blow your mind. He's a South Korean citizen.
Okay.
He receives a pension from the South Korean government because his father died in the Korean War. Well, that pension document is not available in English. And so
you would be like, okay.
Yeah, and with a totally different language structure.
Yeah,
I don't know what I'm looking at.
alphabet is
totally different. So I use Google at first, and then
it didn't translate well.
It
probably.
did.
Oh,
it
did?
Wonderful.
Okay.
That's what told me it was really good.
Yeah.
So we can utilize that, and then if we're required to get a translated doc like that, then we just go to the embassy and say, hey, I need all pages of this document.
Embassy here in the U.S.
He lives here in the U.S.
Okay, so he would go to the embassy.
Yeah. And
his father was.
Yeah.
He gets a pension. Oh,
he gets
nice.
for life.
Wow.
It was pretty cool. And then he was an older gentleman. And then so foreign nationals, it's actually a lot less paperwork. Yeah. And you got to put a little. If we're purchasing, we got to put more down because again, we're back to risk.
20%.
It's closer to 25 or 30.
Oh, really? Depending on.
Just because it's foreign national.
Okay.
And you have to be able to be eligible to come to the United States. So having a visa would be great, or if you live in a country with no visa requirements between the U.S.
Oh.
And then we actually, I
didn't know that one.
Yeah, because they want to just make sure if you have to come here for something legally, you could.
Yeah.
And then the other thing is you can't be on a prohibited persons list. So you could be from a prohibited country, which Venezuela has some trickier things. With Venezuela.
But the money cannot come from Venezuela.
Correct. You could be Venezuelan. You can even live in Venezuela. As long as your income that we utilize isn't sourced from Venezuela.
Oh, okay. So, like, for example, if somebody from out, like if I was working for Samsung, but I lived in Venezuela for marketing or whatever.
Yeah.
All right.
But if you lived in Venezuela and but you owned a business, maybe a resort in Guadalupe.
Okay.
Well, that business is not in.
I have people that have businesses here from Venezuela.
For sure. That's totally fine.
And they still live there, but they
as
do
long as they're not on a
here.
prohibited person list.
Because like they bring lab supplies from, I think it's China. They bring it here, and then from here they ship it to Colombia, and then from Colombia they go to Venezuela. So he has a business here because they have to pay whatever ships here. They have to pay here.
Yeah.
And they do have a LLC here in the U.S.
And that LLC probably sells to a different LLC.
I
understand that structure.
Yeah.
And we also have to make sure you're not a prohibited person, and that would be probably somebody in Maduro's.
Some Maduro's
delegation.
list.
I had a customer that was Somalian.
Okay.
We know that country's pretty unstable or has been recently. Yeah. So I would just go pull his name and anything like it in the government database and just say, okay, well, we're not a prohibited person. That's fine.
Okay. Even if you're not a prohibited person.
And if you think you might be, let me know. And we can always look because we're on different avenues.
Yeah. Oh, I have a story.
Yeah, I want to hear this.
I used to ask, like, do an interview and ask, like, do you have, because when I worked for somebody in another team, and I was like, do you owe money to the IRS?
Yes.
And they said, no. Okay, no. And then She said, no. Okay. We moved on. We get the loan. We went out and looked for houses. We got under contract, and then the loan officer, when I send in the contract, he is looking out, and then he sees that he's being sued by the IRS.
Yeah. Oops.
For 50 cents. He doesn't owe money.
Not yet.
He's just being sued by IRS.
Means he will owe money. They don't lose.
Oh wow!
Yeah.
And it's like, and then we added to the question: are you being sued?
Yeah. So in our,
it's like, what the hell? I mean, let us know. They're going to find out. The loan officer. I say them because of the loan officer.
Yeah, for sure. I tell people that you need to be completely honest with your attorney and me.
Yes.
I'm not the IRS. We can discuss views on them later. But no, we can, as long as we know,
yes,
then we know what we can avoid, or hey, we know, we're being sued by the IRS. Okay, well, that takes this off the table. Now we got to go a different direction. Because we have products that allow for messiness, for lack of a better term. I had a customer that we closed. He didn't pay his mortgage for 20 months, 18 months at all, like nothing. And they're going, and this was kind of COVID.
Was he foresees? Or
no,
was
so
he
it was
on a
kind
program?
It started before COVID.
Oh, I see.
So they couldn't foreclose, but they couldn't go in forbearance because he was already.
Oh, forbearance was.
He was already in bad standing. Well, he didn't pay his mortgage for like 2 years.
Wow.
And then they renovated the place, sold it, paid off that mortgage, all the fees, all the extra interest, and made like $400,000. And so then he's like, well, I want to buy a house now. I'm like, well, hold on now. We haven't paid a mortgage that we were supposed to for a while. But we were able to do it. We had to put a good bit down. Mm-hmm. Obviously, credit score wasn't fantastic. Mm-hmm.
But it was going to get better because he paid everything.
100%. So, well, the late payments take a while to roll off. And
3 years?
3 to 4. Okay. With a mortgage late, it actually impacts your credit score with a mortgage company more because we weight it. So housing debt has the biggest weight on your credit score.
Of course, because I'm a
where
house.
You sleep.
Yeah,
it's important. So then it's installment debts, your car.
But not just where you sleep. It's also because
it is important.
I am lending you for a house.
That's true too.
And and then you are late on your house. So it's like, okay,
that's a higher risk. So we were able to get him into a house. I think he put like 40 or 50% down, which he had because he made such a profit on his old house.
Yeah.
So just because there may be something that you feel is problematic doesn't mean it's insurmountable. So definitely tell us. We will find out.
Please tell.
But we may have a solution that we wouldn't have in the spur of the moment. But if we can find it ahead of time, then we can all as a team plan together.
Yeah, because we need to put on the contract some days of contingency for them to do their job, for the loan officer to do his job, and an appraisal too. And they're gonna do their job. They're gonna find out who you are,
we'll do
what you do, like everything.
And we can't forget it necessarily. And once my processors see it, once the underwriters see it, once they pull certain reports,
because the underwriter is with you, right? It's in house.
Yep.
Now, but you guys don't even know each other.
No, we do talk.
Okay,
we're allowed to ask questions. They're happy to answer them. But the underwriter's job is to make sure that Freddie Mac or Fannie Mae or whoever the end investor is doesn't make us buy that loan back. Because all they're doing is I see them as quality control. They make sure that everybody did what they were supposed to and make sure everybody's covered because loans get audited all the time.
But for example, when a house comes lower in the appraisal, the bank is not saying, oh no, it's too low. No, the bank is saying, why? Why did you find this so low? Like, I want to lend them the money. But of course I cannot lend more for a house that is worth less according to you.
Yeah, the
Because
professional.
I always say, this is not a science, it's an art.
It is.
To appraise a house, and then you don't know if he had a bad night or
he's not from that area,
or if he if he fight with his wife that morning.
That's true too.
I'm telling you.
I think I've had him before.
Yeah, see, it's all sort of things that could be. Is so the person is his profession. He's most likely to be a good professional, but guess what? He's a human. He makes mistakes.
True.
So the bank says, "Hey, look, I understand your point, but there is more houses over here that I think give the value to that house that we want to lend the money to buy."
Yep. And to that, we definitely can find appraisals and provide comps. Like you said, hey, these houses we think are better. But the way the appraisal system is set up after 2008 is they have the final say. And so the key...
Yeah, I've never seen anybody reboot it.
I have.
You have?
We've had some success.
But what, $2,000, $3,000?
I've had one that was like 10.
Oh,
I've got about 10.
Wow.
So there's part of it too, is we'll look at an appraisal and you can tell this is a good appraisal and the house is just maybe not as much worth as much as everybody thought. I've also had some that I go, this is really poor. These comps aren't very good. I had one actually.
Yeah, that fight with the wife.
Yeah, for sure. Well, I had an appraisal, the same appraiser, same house, 8 months apart. And she lowered the value the second time. And I was like,
it was the same appraiser?
Same appraiser, same house.
See, she
had a bad
fought
day.
with her husband.
And I actually went to her old appraisal, and 4 comps were still good that she hadn't used in her new one, and I sent them back to her.
Because it's 6 months, right?
It's about, well, it varies.
Okay.
This house was in Franklin, Tennessee.
Okay.
It's a higher priced area. It was rural, so the houses are far apart. So finding comps, instead of half a mile, we're talking 5-10 miles.
Oh,
because
it's so big. It's like I mean,
out.
my house right here has 10 acres.
Exactly.
So you gotta be
and you know, across the street was Longhorn Steers. So there's no neighbor right there to go off of. So it opens it up in terms of for comps for maybe a little bit bigger radius as long as it's supported.
Yeah.
And age. So, like, the automated systems have a hard time with my house in Jefferson.
Okay.
Because my house is the only one that sold in the neighborhood for like 2 years. That's it. And so, we have like a 30 house neighborhood.
Now,
there's been no sales. So, the automated systems that go off of just public record have a hard time determining how much my house is worth.
Wow.
So, because
you don't have recent sales in there.
So, and I look at the comps in their system. I'm like, that's
not right.
That house was built 2 years ago.
Well, if it's mine, it's not right.
No, exactly.
If I'm gonna buy it, it's wrong.
It's way wrong. So, but with that, we do work with AMCs, which is an appraisal management company.
Oh, okay. Oh yeah, I know which one is.
Yep. So in 08, before 08, banks and lenders were able to hire appraisers directly.
Okay.
And there was...
Oh, yeah. You know, the people told me, like, recently, like, where I was explaining, so this is a process, and they have told me, like, how do we make sure they don't know each other?
Yeah,
and
for
I'm
sure.
like, no, this is a law. This is something that people is paying attention to.
100%. So what they did is they inserted an AMC, appraisal management company, between the lender and the appraiser.
Okay.
So we send our order to the AMC. AMC puts it out, and the appraisers in contract with them will say, yeah, I'll do that one.
Okay.
So we do have the ability to request the AMC remove an appraiser from the panel that they reach out to for us.
Of course.
If we do know someone, we can ask them to be added to the panel, but that panel is just a round robin. It's not that we get them. It's not.
Okay.
That,
there you go.
Right. And then the AMC reviews all the appraisals to make sure they're accurate, they have all the right info, that there's no funny business going on. And then if
because
we
they
changes,
don't get it they don't get in touch with the seller. Just the listing is just to like, hey, I'm going there.
100%.
Like, can I go that time? And that's it. That's all they talk.
And I've had appraisers actually cancel appraisals before, or cancel the order because the listing agent or the seller got a little too involved trying to influence the value.
Oh, because I've been recommended. I don't know if this works, but I've been recommended to, like, if you did upgrades on your house.
Yep.
I've been recommended to leave them the receipts and everything you spend on the remodeling.
Yep.
But you cannot like
Nope.
go and like insist that they use this.
Nope.
No, you're like, hey, I did some remodeling in the past year, and you cannot even put it for like 10 years, 5 years. No. I did remodelings in the past year, and here are the receipts and the invoices. That's it.
Yeah.
That's all you can do.
And what that does is also, most appraisers appreciate that because then they know what they're looking at.
Mm-hmm.
But if we start insisting, oh no, this probably brought my value up 10,000.
Oh yeah, if you
the
start saying,
went the wrong
yeah,
way.
exactly. Now you are implying stuff.
And if an appraiser feels that they're being influenced, negatively, positive, whatever,
yeah,
they'll time out and say, hey, I can't do this one.
Oh,
And they'll actually.
thank God that never happened to me.
I've had one canceled because the seller got too.
And how do
involved.
you deal with the days of contingency?
Yeah, I go, hey, we
We need more
straight up
time.
with everybody. I say, hey, it was canceled because of X, Y, Z. Because,
Like straight up, like because you seller have been contacting
You-
them or talking to them, or
yeah,
they didn't like this comment.
100%.
Or
I go, hey, because what happens is the appraiser will tell the MC, hey, I'm canceling this order. I feel like so-and-so is trying to influence the value from the
MC is management
appraisal
company.
management
Okay.
company. So then they're the middleman between us and the appraiser.
Yeah.
So then we just take that email and I go, okay, and I'll reach out to you, the buyer's agent,
Goodbye.
and say, hey, this is what we're being told.
And then I reach out to the gang. No, just
Yeah,
kidding.
exactly. And we say, we got a ride? No. And then you usually reach out to the
I
listing
know some
agent.
people in motorcycles. No,
Yeah.
just kidding.
Yes, you do, but that's different. But
That's in Venezuela.
it's very different. But I also tell, hey, listing agent can call me. I'd love to talk to them so they know if we need to remove a link in the chain so they understand what's happening.
Yeah.
But our whole ethos is communication. That's good communication.
Yeah.
That's most important when there's bad things.
Yeah.
So if things negatively happen in the process, which if you do it enough, it'll happen.
Mm-hmm.
Communicate it, and take the emotion out of it.
Yes.
Because it can be stressful, and that
But
we know
that's
it's
our
important.
job.
It is.
That's our job. The clients, the borrower, the customer, the buyer, the seller.
True.
Those people, they can be
100%.
emotional.
That's
and
their
then-
job.
Yeah, exactly. And we can. I can understand. I can relate. So
Yep.
I've sold a house. I bought a house, and
Yep.
I can relate. So I just go ahead and say, like, one of my last clients that recently bought.
Yeah.
He told me like, oh my God, I'm sorry that I'm calling you, but this is frustrating. I'm like, oh, it's okay.
Yeah.
For you to have emotions into this. Now I'm here for you, so we can canalize. We can
Yeah.
put this emotion towards where it needs to go. Because now, if I'm emotional, the seller or the buyer is emotional, and then the loan officer is also emotional.
And
It's
then-
like, ah!
Yeah, and that's where you do a good job. You take that, you keep
Yes.
the empathy, because that we both know.
Yeah,
Buying a house is stressful.
it is.
Selling a house is stressful.
It is.
So we
But
know that.
we do it, and you don't have to.
No.
We take it, so you don't have to stress.
100%. I think my wife said it perfectly. People asked her, we bought a house a year ago, actually a year and a half ago. And they're like, how did it go? And she's like, it was the easiest thing I've ever done. And I was like, I was stressing because I know not only the normal buyer stress,
Exactly.
but I know what can go wrong. So-
Exactly. And were you doing it? No.
Yeah. Well, no, I wasn't. I was involved, but
you
I
cannot
wasn't
be
doing
the
my
loan
own.
officer.
No.
Okay.
No, I wasn't the loan officer, but I was involved.
I can be my own realtor.
Yeah, I know you can. and I wasn't the own loan officer, but if the processor had a question, she called me
Of
and was like,
course.
"Hey, what's this?" And so, I could watch it through the process,
Yeah.
so, and I know
You can make sure they're processing.
Yeah, well, sure, but that my stress came from all my other customers or any other issues or their fears started coming to me, and I'm like,
Oh, now I understand.
I didn't have a loan
Now
officer
I'm
to
on
tell
their
me to calm
shoes.
down.
Yeah.
Everything's fine because I knew not.
Now you call, hey.
I knew the real.
Everything
yeah.
is okay.
Oh,
Calm down.
my chief closer was, or she was a processor then. She was like, "It'll be fine. Don't worry about it." I'm like,
Yeah.
okay.
Like, oh my God, now I'm on
Yeah.
their feet.
And my wife was like, "Oh yeah, it's easy."
And you're like, yeah, you didn't
I'm
see
like, well,
me
"That's
at
great
work.
because if I could take the stress off my own wife from buying a house, then okay, maybe I'm hopefully projecting a similar level of calmness to my customers.
My wife's thought the same when we were selling.
Yeah.
It's like, oh, that was nice.
That was easy.
Yeah.
I'm like, great.
And you didn't deal with all the negotiations.
Your spouse was involved in the sale, but was like, this was easy. We both.
It's like, you get paid for that?
Yeah, right. Tell me about it. No, you take care of all. You get paid for all the other stuff.
Exactly.
But if we can make our spouses feel like comfortable by just doing what we normally do, then I feel like we're doing a great service for our customers to project that calmness and also give them the confidence that you're working with a professional that's been there and done that.
Yeah.
So when we tell you it's okay, great. I mean, I have conversations with first-time home buyers. I go, look, let's not worry about something until it's necessary.
Yeah.
Anything can happen.
Yes.
A meteor could fall out of the sky and take out Tampa.
There could be a pandemic.
Could be. Could be anything. So why worry about it now? Let's focus our energy on packing, on prepping, and then if I need something or there is a problem, then we address it together.
So this is so true. No news is good news.
100%.
Okay.
Yeah, no news is good news.
Because many people is like, oh my God, what do I need to do? What do I So worried. It's like if nobody's asking you, yes.
Yeah.
If nobody's asking you anything, we're good.
You probably need to go to Home Depot, buy some more moving boxes. That's what you need to focus on. Just get that house ready so you can move out.
All right.
Yeah.
Hey Keith, thank you so much,
Thanks for having me,
man.
it was a blast.
Oh please, let's do it again.
Yeah.
And I don't know, in like another whenever you have time, please come and we can talk about other products, other programs.
Yeah.
They're always changing. Oh, well, one last thing.
Yeah.
So the 18th of
Right.
September. We're in the second week of September.
Yep.
And the Fed is about to meet, and they've been going down.
Yes.
They've been coming down. So how do you see it? One last thought on the interest rate.
You picked a nice small topic. So so the Fed, you're right, they're having their September meeting on the 18th.
Okay.
That's when they're going to announce what they're going to do for setting Fed policy. So Fed policy being the Fed funds interest rate, which is basically the price of money in general.
How much is money?
Of the dollar.
Okay.
Basically. So the Fed
we want it strong, right? Or no?
Well, there's different things. We want to. So the Fed funds rate is what banks use to borrow overnight to shore up between deposits and withdrawals.
Okay.
That's why it's kind of based on. That's how it kind of sets the price of money.
Okay.
Is that if we have restrictive policy, higher Fed funds rate, then people are less likely to borrow, as we've seen over the last 2 years. Yeah. It has knock-on effects throughout the world in the economy.
Oh yeah.
And every country has their own central bank setting their own funds rate for their own currencies. So we've seen differing policy around the world, but the Fed rate has been unchanged for like a year and a half, I think.
Yes.
I don't remember the number. I just know it's high. It's restrictive. Well, that's like pumping the brakes on an economy. And the reason they did so is because
the pandemic.
Inflation.
Yeah.
The pandemic from the inflation, or inflation from the pandemic, which we could probably have 3 more podcasts on theorizing that. When you print it, there's more of it, it's worth less. 100%.
Yeah, of course.
There's other knock-on effects as well. So what they did is they said, well, if there's too much money supply out there, inflation is too many dollars chasing too few goods.
Yeah.
So let's put the brakes on to reduce the amount of dollars chasing goods.
Yeah.
So it's to cool the economy. I mean, that is why you do it. You have
so you gotta cut rates so people start buying stuff.
So now that it's sufficiently cooled, which
moving the economy.
Correct. So
without giving, because that was what happened.
That's the trick.
You gave money to move the economy when it was stopped.
Yep.
Because of a pandemic. Now you want to lower rates to move the economy, but not give money.
Well, and back in the pandemic, the Fed funds rate was 0.
Oh.
It was zero interest rate policy. So you can't cut. You can't cut from 0 or near 0. So only way to go is
give money.
Give money. Ugly. So
yes.
No, it's ugly.
It's ugly now.
It's ugly. It costs
back
trillions.
then I was like, woohoo!
Yeah, for $2,200 cost trillions. No, so the other mandate of the Fed is, yes, keep inflation at their target, which there's lots of arguments in different studies of whether they're there, past it, whatever. Their other mandate is to keep the labor market healthy, so jobs. And that's been very ugly of late. The unemployment rate is going up.
Okay.
The real unemployment rate is definitely up and staying up.
Yes.
The jobs reports have been all adjusted lower for the last year and a half.
But it's because I don't feel like the unemployment rate is up because there's no people to work, but because there is sometimes not good pay or not qualified people.
There's also a lot of people taking part-time work because there's no full-time, what they're qualified for. So it's been tricky because if, let's say tech, say Google laid off 20,000 people.
Yeah.
Well, if those 20,000 people go work at McDonald's, technically they got a job. So that's a net zero.
Yeah,
but is it?
Yeah.
And so that's where some
now
of this,
their lifestyles went down.
100%.
Nobody wants their lifestyle
now they're
to
having
go
to dip
down.
into savings.
Yeah.
Or tap into credit. Well, savings are at their lowest they've been in 20 years. Credit's at the highest it's been in 40 years, maybe ever.
Wow.
So people are relying on credit, less on savings because they've depleted it.
Yeah.
So now we're at kind of a crossroads. Well, there's a lot of weakness in the labor market in lots of different places. So the Fed is saying, okay, well, two mandates.
Exactly.
Now, inflation's going closer to where we needed to be, and it's kind of on that track. That's what they say is two.
Yeah.
Depending on how you measure it, we're there now. But
yeah, because if you include services, if you include groceries, if you include the bills.
Right. Well, in housing, lags 12 months.
Yeah.
So if we use today's figure, we're there. If we use the figure from 11 months ago, we're not. And so a lot of their policy is set on figures that have lag effects, which is why they were slow to increase rates when they should have, and why they're slow to cut. So they will cut on the 18th. I say they will. Every indication is they will.
Oh yeah, they're saying they will.
They're saying
it's coming down slowly, but coming down the interest.
Well, we'll see.
Slowly.
So
but it has been like in the last month, right?
No, they haven't touched. Mortgage rates, yes.
Mortgage rates, mortgage rates.
And the reason for that is mortgage rates are based on what we think the Fed's going to do.
Yeah.
So right now we have a baked
speculations.
That's all it is.
Yeah.
But it's baked in now that the Fed's going to cut 0.25%.
Because they said it, that's why it went down.
There's also an argument that they're going to cut 50 basis points. And the market was hedging at about 40% chance.
Okay.
After this last jobs report, they don't really know because there's weakness, but the unemployment rate went down because labor participation went up. And so it's like, we don't know what they're going to do.
Economy.
Yeah. And there's a lot of smart people.
So we get to the conclusion that we can hope for it to start coming down faster.
I don't know if it'll be faster.
Okay.
Because I kind of say it's like gas. It's like gas prices.
But then they're quick
to cover risk, and they're slow to give it back because they're just concerned it'll dip back up again. So it'll come down slowly. It's going to continue over the next year or so.
Amen.
We think we know where the target will be, but it's probably going to take a year and a half, 2 years to get there.
Okay.
Now, if we have large-scale layoffs and the unemployment rate cranks up and inflation tanks, well, that could change things more quickly. So the rule of thumb is bad economic news is great for mortgage rates.
There you go.
So that's the silver lining in bad economic news.
Well, now, thank you. See you next time.
Yeah.
And muchas gracias por haber estado allí. Esto fue Atlanta Dulce Hogar, un podcast dedicado a bienes raíces, comprar, vender o invertir. Thank you, Keith. Thank you so much.
Thanks for having me, Miguel.